Last Friday in our Stock Talk, Zeke, a member of our tribe, we get together every Friday and talk on a Zoom call about the stock markets and what we think is going to happen. He asked me, how come you don't talk about IBM anymore? And what he was referring to was back 2019, I read this book, The Big Nine, and Amy Webb indicated that the leaders in technology in the future would be IBM, Alibaba, Microsoft, Tencent, Apple, Baidu, Facebook, Amazon, and Google. Well, I kept my interest in the U.S. stocks, all except IBM. And I asked Zeke, when he asked me this question, I said, who's the CEO of IBM? And he answered, I don't know. And I said, neither does anybody else, and that's why I don't own IBM. But let's get deeper into this about IBM and the Big Nine.
Best of Us Investors presents Kerry Griegmeyer.
This is my trading views chart, and what I wanted to do was compare the performance of the Big Nine since Amy's book in January of 2019. So what I did was start with a chart on IBM. I then, and you can see the performance of IBM here, and that's this jagged line. I then went up here and clicked on this plus signal, and it says compare and add symbols. And I added Microsoft, Apple, Google, Alibaba, Tencent, Baidu, and Amazon. And so now you have a comparison of how did the Big Nine do relative to each other. And you can see that the best performer is Apple, up 228% since the book was published in 2019. Now, it got as high as 360, and then we moved into this down market. But then the second best performer was Microsoft, the third Google at 68, IBM then at 34, Tencent at 15, Amazon at 11, Baidu down 18%, and Alibaba down 21%. I was a little shocked with the Amazon, but I understand Amazon has been under tremendous pressure. But I think there's something to be learned here that Apple, Microsoft, and Google are the strongest and continued to be the strongest throughout. China hit its peak back here in February of 21, and then we moved into the era of adversarial conflict with China, and that's why I don't invest in China stocks. You look at this because realistically, Alibaba, Baidu, and Tencent basically emulate Google, Microsoft, and Amazon, but they don't. And they have 3 times the population. But because of this cloud over them, they don't perform as well. So with that in mind, I then wanted to pursue Zeke's question further. To learn more about who is IBM, I go where I always go, and that is Seeking Alpha. And the first thing that pops out at me is they're 1 year, they're up 6%. If I look at it 5 years, they're down 8.17. Year to date, which is just a couple of days, they're up 1%. But when I looked at this 1 year, they certainly did better than the S&P, and they did better than their counterparts in the Big Nine. So then I wanted to say, okay, let's figure out who they are. Their market cap is $129.9 billion. Their yield, they pay a good dividend of 4.59%, and their earnings per share are their earnings per share are $9.05. Their PE ratio is 15. And then what I like to do is go over here and go through the news and see what's happening to influence, to give me an idea of just who they are. I don't really interested in the show that they're having. They're joining hands. I read this article, and basically what it says is they have formed an alliance with Japan to become join hands in building semiconductor technology for the ecosystem of Japan. Then I saw another article that interested me, that they bought another company, Akko. And what this is, as I read the article, is Akko has a very strong relationship with the United States government. And it kind of made me laugh. It said that what they are in is the acquisition will help companies ramp up U.S. federal government digital transformation. What does that mean? That means that that the government is still in an analog system, and they have not converted all their numbers and all their data to digital format. And Octo and IBM are going to help them do that. I find that kind of funny, but that's for what it is. Then I came across something that I thought was very interesting. The 5 trillion fund favorites, 12 stocks mutual and hedge funds love. So I thought, well, that should be interesting. And this is an article that came out on December the 4th, 2022. And I read through it, and then it comes down and says these are the 12 stocks that the hedge funds and mutual funds are showing strong positions on, because in the 1st of December, they believe these were going to be the leading stocks as we move into first quarter of 2023. Consolidated Energy, Damper, Fizzery, don't know them. Humana, I know them. MasterCard, ServiceNow, Schwab, Uber, United Health, Visa. I do own Visa, Workday, and Wells Fargo. Wouldn't own Wells Fargo because of their unscrupulous behavior in the past. But then it came up with, on the other end, there are 23 stocks, mostly big names. The hedge funds are shorting, and mutual funds are underweight, according to the Goldman Sachs analysis. And here we have, you can read them, AbbVie, Chevron, IBM. There's IBM, Coca-Cola, Realty Income, AT&T, AMD, Disney, McDonald's, Pepsi, Walmart, Broadcom, which I own, Ford, J&J, 3M, Pfizer, ExxonMobil, which I own, Costco, Home Depot, Morgan Stanley, Moderna, Procter & Gamble. So this, I thought, was some very valuable information. And again, I got this from Seeking Alpha. Then I wanted to go back, and here I found their company revenue, 2017, 2018, 2019, 2021, 2021. And what I stuck out at me is 2018, and then they dropped substantially. And they've just kind of plateaued and leveled out. Earnings per share, kind of a similar thing. That's quarterly. Let's look at annual. Hit a peak and then plateaued. Have some expectations for 2022. Then what I wanted to do was go to their financials. What I like to do in the financials is basically see how good are they at what they do. For projected for 2022, they're going to have roughly 60, I guess that's $1 billion in revenue, that they're going to have cost of revenue. This is the cost to manufacture their product before they take it to deliver it or to sell it. And so you can see here a little better than 50% of gross profit. Then you come into their selling and general administrative costs, their research and development, that's investment in the future. And you can see their total operating expenses of $25 billion, and we come down with a operating income of $6.9 billion on revenues of roughly 60 billion. So something in the neighborhood of 12.5%. Is that good? We need to compare it to other companies. But then the next thing I wanted to do, I came back to the Seeking Alpha homepage, and I went down here to where the description of who they are, and here's a link to their website. And it brings up the website, and I've been through this, and I've looked at it, but I wanted to answer the question that I asked Zeke. Who's their CEO? So what I usually up here, it says something about supporting a management team or something of that nature. I couldn't find anything. I couldn't find anything as to who they are. So I went through consulting. I went through everything in here. I went through this whole maze of what we're all about and who we are. And I could not find anything that told me who their management team was. So I went down here to the bottom, and this is where you find, I think, the things they want to hide. And it says About IBM Annual Report. I clicked on the annual report, and I'll be darned, there he is. This is the chairman and chief executive officer of IBM. Have you ever seen him before? Can you pronounce his name? Arvind Krishna. Have you ever seen him on any of your TV shows? Do you know who this guy is? No, I don't. And I think that answers Zeke's question. Why doesn't anybody ever talk about IBM? Because they're a sleeping giant. I know they are leaders in quantum computing. And they tell me here that today over 70% of our annual revenue is in software and consulting, both delivery, healthy, sustainable growth, $6 billion in stockholders through dividends. As I said, they pay a good dividend. They've actually, we made 15 strategic acquisitions. They're a buyer of small companies, and 50% of their, we saw partnership revenue grow with Amazon Web Services, Azure, Salesforce, growth more than 50%. So I guess my answer to Zeke's question is that's why we don't buy IBM. And again, their PE ratio, I think was, I told you, let's go back and see. Their PE ratio is about 16. That's better than most of the other tech stocks. So I just believe, it's like I did a video that said that Bitcoin is going to go to $100,000 a coin because of Reels and TikTok, because that's who influences us. Nobody's talking about IBM. So what do we learn from all this? Well, the first thing I would say is put some tools in your toolbox and find the links below for Trading Views and Seeking Alpha, because you can't keep up with what's going on without doing what I just did. The other thing that I think I've learned, and I think that you need to be aware of, is the world has changed as to who influences us making the decisions that we make. Yes, that 90% of the trades that are made in a given day are made by hedge funds and mutual funds. In many cases, it's a computer and an algorithm that is making the trade. But nonetheless, they're trading off the movement and the activity of those of us who make decisions with our minds as what we're going to buy and sell. And we make those decisions based upon the influence that is projected to us from TV, but more importantly, and particularly in the younger people, the information they get from channels like this, YouTube, from Reels on Instagram, and from TikTok. That's what's moving the world today. And if we don't recognize that and take it into account in our investment procedures, we're going to lose. We are going to lose. And again, this is crazy, but I am of the belief, and I learned this just as I have gotten involved in GPT-3. In November, nobody knew what GPT-3 is. But you go to Reels, you go to TikTok, and put in that little search. You see that magnifying glass? Put in that little search, GPT-3, and you watch and see how much knowledge is being dispensed on TikTok and Reels about what this is all about what AI is all about. You would not have found this if it were not for Reels and GPT-3. Now, the third player in that is probably YouTube. But I again, do your own study of it. The people who get it first and put it out with the best explanation are on TikTok and Reels. Those 1 minute shorts. Why is that? Because that's what the young people want. They'll spend 90 minutes at a time on YouTube or Reels or TikTok, but they want it fast. They want it fast. And if it's good, they'll watch it over. I did a video on Bitcoin going to 100,000. And in there, I showed you, I think it was a 24-minute video produced by the Wall Street Journal explaining what TikTok is doing and how it works. And if you haven't seen that, shame on you. You need to see it. All right. That's my take today. That's my take on the big nine and how it's down to about the big three and where we're going from here. I'll talk to you again tomorrow. I hope you find this informative.